Welcome to Dow Stock Talk, where I talk about topics relating to investing and finance, but more specifically, the stock market. In this video, I'll be going over different ways you can reduce your risk when investing. Okay, before we get started, make sure you hit the like button and the notification, and if you haven't already, subscribe to the channel. So one of the things you can do to reduce your risk when investing is using dollar cost average. So dollar cost average is, instead of you putting a large lump sum of money at the beginning, you spread out the money you're willing to invest throughout a duration of time in order to help get the average. So you might buy sometimes high, sometimes you might buy low, but you're just buying it consistently, so you're getting the average return. And historically, the average return has always been positive over a long period of time. So that's one of the things that you can use in order to reduce your risk. Another thing you can do is, of course, a lot of people already know it, diversify your portfolio. So you don't want to just have all your eggs in one batch, as they should say. You don't want to just invest in one company or two companies. You want to invest in multiple companies so you can end up reducing your risk. And another thing I would like to say is also look at different companies that are in different sectors. So you don't want to be all tech, because if something was to happen to tech, or all healthcare, you would be out of luck. So diversifying your portfolio is another thing you can do in order to reduce your risk. One of the things that you can also do to reduce your risk is pay attention to your asset allocation. So a lot of times this goes with diversifying your portfolio, but so the difference is with diversification, like inside of stocks, you can own multiple different companies and be well diverse. But for your asset allocation, it's still 100% stocks if that's the only thing you own. So asset allocation is being able to determine percentages of how much you're investing in each class. So like a stock would be a class, a bond would be a class, commodity would be a class, even like cash be asset. We have like real estate. So those are different classes, and managing the percentage you have in each one in order to manage your risk. So normally you'll come to a conclusion, I want this to be around this percentage, this to be around this percentage. I mean, you don't, for beginners purposes, like you don't have to have it like mathematically all thought out, but you do want to pay attention to how much percentage you have in stocks versus bonds versus real estate. And then based on your risk level, get a decision off of whether this is good way to distribute the money. So that is a way, asset allocation. So another thing you can do to reduce your risk is do your due diligence and your research. Make sure you constantly educating yourself, you keeping up from what's actually happened, and not so much just from things you see on the news. Just make sure you do your independent research so you can make more informed decisions. The more you know what's going on, the less risk that you have to take. So don't forget that. Do your due diligence and make sure you do your research. One of the things you can do to reduce your risk when investing is to invest in long term. So time when you're investing long term is always on your side, because you give yourself enough opportunity. So if something for unseen to happen, your stocks will be able to recover. And generally speaking, businesses keeps growing over time. Now, a lot of times with current events and stuff, you can't really time certain situations, but the longer time frame you have, the more you can wait it out and increase your chances of success. So investing long term can help reduce your risk. And last but not least, what you can do is have patience. Patience can help reduce your risk dramatically, because the thing about it, when you have patience, you take advantage of good opportunities when they come to you and not try to force it. And you don't want to make decisions off of emotion or adrenaline, because those are the situations where you increase your risk unnecessarily. So make sure you have good patience and you invest when good investment opportunities present itself. And that concludes this video. Make sure you let me know in the comments below, what are some things you do to reduce your risk? And in my next video, I'll be going over different types of stocks. That's right, different types of stocks.